Duolingo is an interesting stock. It is one of the stocks which is not thought as an AI profiteer. When it comes to stocks that will benefit from AI, I think Duolingo is one of the top ones. Duolingo teaches people a lot of stuff. First it was languages, now it's math and music, and here a lot of their costs are in creating those learning materials. Duolingo cuts 10% of its contractors as the company embraces AI. Before, contractors created everything. Now the AI creates content translation, and less people will have to review what's coming out. So that is gonna save them a lot of money. So let's look into Duolingo. Is it a buy? Would I add it to my portfolio? We can see user growth is enormous. Daily active users up 63%, paid users up 60%, and yes, there's a free version of Duolingo, and only 8% currently pay for Duolingo, but we can see that numbers rising, which is very good. The app is just more engaging, daily active users up way more than monthly active users. Revenue is also on a growth streak. The company is just in growth mode, what else is there to explain? And they're really highlighting how much they're switching from only language to music, math, and that's probably only the beginning. Overall, Duolingo is good at one thing: getting people to learn in a fun way. And if they manage to do this with language, they will probably be able to do this with other stuff as well. Gamifying anything makes it more engaging, and they're very good at gamifying learning. And that means people will spend more time, even if they don't pay, they will see ads. And the better they are at engaging people, the more money they will make. And they're once again saying how much they're gonna embrace AI. That they're even gonna use it to create podcasts to learn from. They're just only starting to roll that out. So while AI is not replacing a lot of the costs yet, eventually they will replace more and more people who work on the content. They have been cutting costs as well. As percentage of revenue, most of the stuff has decreased. So their margins, at least gap margins, are getting bigger. Everyone can see revenue is not really decelerating. They've been growing at a constant 40%, and their gross margin has been very stable. I mean, running the app basically doesn't cost anything, so of course they have a very high margin here. The operating margin, on the other hand, is way less stable. It has been improving, and they're slowly becoming gap profitable. Currently they are profitable, but just because of one thing. We can see they made 8 million in interest just in one quarter. Duolingo has a huge amount of cash on hand, 700 million to be exact. And with interest rates being this high right now, they make a lot of money. So they are gap profitable now, but only because of their interest income. They are cash flow positive and are very stably cash flow positive, but that's only because of one thing. A lot of their expenses come from share-based compensation, currently sitting at 25 million. While yes, their free cash flow is bigger than that, around 8 million higher, this is still a concerning amount of share-based compensation. You're gonna see big share-based compensation with this company, just like any other tech company, just like at Google, just like at Meta, but what matters is the amount. But eventually, Duolingo will be able to cut a lot of costs. Currently, they're investing a lot in these new programs, like math, like music, getting AI implemented, and that will cost a bit of money. But once these programs are out, they will be out and still work. English will still be the same tomorrow as it is today. Math will still be the same tomorrow as it is today. Of course, the apps will need some updates, some extended courses, but once the courses are out, every time someone does it, it's basically free money for you. So while yes, they're barely free cash flow positive right now, in the future, it might look very different, where the free cash flow margin is going to be way higher. The market cap is 9 billion. They could buy back around 8% of shares with the cash on hand. They only did one acquisition so far, which was for $4.5 million. They bought the animation studio Gunner, which they worked with before, and they make a lot of the designs that Duolingo uses in the app. So while this is a one-time expense, this is gonna increase your margins in the long term. Illustration, animation, a lot of that will now be built in-house as well. So now is the question of valuing this thing. Now let's go off this 32 million that they make right now in free cash flow, around 128 million in free cash flow. And let's take the stock-based compensation times 4, around 100 million. Let's take the free cash flow and the stock-based compensation. Let's say the free cash flow grows at 40%. While that may sound very conservative for the next 5 years, I mean, the revenue is already growing faster than 40%. They're gonna be able to do some cost cutting due to AI, etc. So why not say 50%? Well, I want to be conservative. And this is not even very conservative. Duolingo is a growth stock. When the growth disappears in a growth stock, then it gets ugly. I want to protect myself from that. 25% afterwards for the next 5 years. That will leave us with 1.68 billion in free cash flow. Well, what about the stock-based comp? It's probably gonna go slower. 20% growth for the next 5 years. Still a high amount of growth, but not as fast as free cash flow. 15% afterwards. Then we come to 435 million in stock-based compensation. If we take that together, that will leave us with 1.2 billion in net free cash flow. Well, that at a 20 multiple, which I think is fairly reasonable for a stock like Duolingo. Even in 10 years, it's going to be a fast grower if the growth story doesn't get disrupted. Well, then we would come to a valuation of 9.6 billion, which is 6% below their current value. Now, would I buy the stock right now? No. While it may seem like a good return, I mean 10%, not bad, but I don't think it's worth it. There's a lot of risk with the stock. Yes, there's a huge upside. What if I grow free cash flow at 35% for the next 10 years? Well, yeah, then 25% discount. But it can also go wrong. What if growth disappears? Or not even disappears, just way less. 20% growth, 15% afterwards. Well, then they're only growing with stock-based compensation. Even if I cut this down to, let's say, 15 and 10%, or even more conservative, 10% and 5%, it's still not a buy, not even close. So that is the risk with growth stocks. Now, after IPO in 2022 to 2023, was it a buy? Probably. If I would have had the stock in my radar, I would have hopefully bought. January, they already got a lot of free cash flow and the stock only went up a bit. I will put it on my watch list. If it falls maybe to 100 again, or maybe 150, I don't know. I don't have a price target on this one. I will consider adding it to my portfolio. But right now, the risks outweigh the benefits for me. This is not the type of company I usually own. I like to have way more predictable companies in my portfolio, and this is just not something that is very foreseeable. A lot can go wrong, a lot can go right. I think the company's gonna have a great future. I don't think it's gonna go bankrupt or something, and I think they're gonna develop very well. A lot of people are using it. It's a great app. They're gonna go into way more fields, but I'm gonna pass on it for now. What do you think? Write it down below. Have a good day.